Hello everyone, welcome to Private Tuition Provider, and this is the free video lecture on IAS 40 investment property. Let's find out what's in IAS 40. The objective is to define the accounting treatment and disclosure of investment property in the financial statement. What is investment property? Any land and building or part of it held for rental income or capital appreciation or both of it. Capital appreciation is to invest in the real estate industry today for future gains. Now let's see which type of property doesn't fall under the umbrella of IAS 40. Is the company using a property for production purpose or for the administrative purpose and it is occupied by the company, then IAS 16 is applicable. If a property is constructed for third party, then IAS 11 construction contracts will apply. If a property is held for sale under the regular business activities, then IAS 2 inventories will apply. And if a property is leased to third party, then it falls under the criteria of leases IAS 17. Transfer to or transfer from investment property can be made only when there has been change in use of property. Let's suppose we are using a property for rental income and in the next period we lease it to the third party. Then we will discontinue IAS 40 and we'll treat it under the IAS 17. Let's talk about the recognition and derecognition criteria. We will recognize the investment property when the future economic benefit associated with the property will flow to entity and all the costs incurred for property can be measured properly. We will derecognize the property once the property is disposed of or permanently withdrawn from use. On disposal, we will calculate the gain and loss and recognize it in the profit or loss of the period. Let's see how to measure it. We will see the initial measurement first. Initially, it is measured at cost, including transaction cost, and this cost doesn't include any startup cost or operating losses or abnormal waste. Now have a look at the subsequent measurement. There are two models, cost models and fair value model. Firstly, we will look at the cost model. In this model, it is initially measured at cost, less accumulated appreciation, less any impairment loss in accordance with IAS 16. Now have a look at fair value model. In fair value model, the property should be measured at fair value at least annually. Then we will account for gain or losses for revaluation in the profit or loss. If we will have a gain, then we will pass the entry credit profit and loss and debit investment property. And if we have a loss, we will debit profit and loss and credit investment property. And there will be no depreciation charge and it is in accordance with IFRS 13. Thank you for watching the IAS 40 summary video. For regular session, contact at our Facebook.